Okay, let's dive right into this. Welcome to The Explainer. Today, we are opening up the ultimate entrepreneur's blueprint, and we're going to break down the language of business finance step by step. If you've ever felt totally overwhelmed by the numbers or, stared at a spreadsheet feeling completely lost while planning your venture, you are in the exact right place. We are going to make this incredibly clear.
So I want you to imagine this scenario. You open up a brand new business today. Customers are pouring in, they're buying up your products, and your sales charts are pointing straight up, right? Everything looks absolutely perfect from the outside. But then, bam, 6 months later, the business is completely bankrupt. No money, no growth, no future. It's kind of the ultimate small business paradox. How on earth can a business make sales every single day and still fail? Well, the answer lies in the one absolutely crucial skill that most beginners never actually take the time to learn: business finance. To figure that out, here is our roadmap for today. We'll start with the small business trap, and then we're going to move through a really manageable 5-step tutorial: tracking revenue, managing expenses, calculating profit, mastering cash flow, and finally, financial statements. Starting off with the small business trap and avoiding the 6-month bankruptcy. Let's make this real. Imagine you've just opened your very own small coffee shop. I want you to just forget all the complicated accounting jargon for a second. Every morning, customers walk into your new shop and buy a drink. Money enters your business. But running that shop definitely isn't free, right? You've got money going out too. Business finance is quite simply the process of tracking where that money comes from and where it goes. Your one and only goal here: make absolutely sure more money is coming in than going out. It's really just about managing the daily flow of money through your cash register and your bank accounts.
Moving to step 1, tracking revenue, the money coming in.
While tracking this is absolutely crucial, focusing only on this step is exactly where that beginner's trap lies. The first concept every entrepreneur has to grasp is revenue. Revenue is just the total amount of money your business earns from its sales. Nothing more, nothing less. It's literally the total cash that your customers are handing over the counter to you in exchange for that cup of coffee.
Let's look at a practical math example for your shop. Say you sell 100 bags of your signature coffee beans today, and you charge $10 for each bag. Your revenue is exactly $1,000. Simple, right? But here's why this matters. A lot of beginners look at that $1,000 in the register, they celebrate, and they think, wow, I'm rich. Actually, scratch that. It's a trap. Revenue doesn't tell the whole story, because it doesn't tell you what it actually costs to produce those 100 bags of coffee.
Which brings us to step 2, managing expenses, the cost of keeping the doors open.
Now, what's really interesting about this next step is how it entirely dictates what stays in your pocket. Expenses are all the costs required to keep a business running. Remember, every successful company in the world meticulously tracks their expenses because running a shop is never free. It costs money to make money, and your expenses determine how much of that revenue actually stays inside the business rather than, walking right back out the front door.
Think about our coffee shop again. Before you see a single dime of actual wealth, you've got bills to pay. You have rent for the storefront, you've got employee salaries for your baristas, you have to pay for the electricity keeping the lights on, the raw coffee beans from your supplier, your marketing efforts, and the maintenance for that incredibly expensive espresso machine. These are the expenses that constantly chip away at your revenue number. And in the real world, stuff breaks. The fridge stops working, milk spoils, a barista works overtime. Expenses can pile up incredibly fast, often way faster than revenue.
Now for step 3, calculating profit, the real value created.
We are now building up to the single most important number in all of business: profit. Profit is the money that remains after all your expenses are paid. This is the actual reward for all your hard work running that shop. I really want you to take this away. Revenue is just the starting point. Profit represents the actual, tangible value your business has generated. It's what is left over when the dust finally settles.
And this brilliantly illustrates the math. Let's run the numbers. Say your coffee shop's total revenue for the month is $10,000, but your expenses, the rent, the spoiled milk, the beans, the salaries, they total $8,000. You do the subtraction and your profit is $2,000. That $2,000 is the actual value created, not the $10,000 in revenue, the $2,000 in profit. All right, step 4, mastering cash flow, the biggest business killer. Now we're entering dangerous territory, because a business can actually be highly profitable on paper and still go completely bankrupt. Why does that happen? Cash flow. Imagine your coffee shop just landed a massive corporate catering deal. You're selling pastries and coffee for a week-long conference, and it's worth $100,000. That sounds amazing, right? It's incredibly profitable. But here's the catch. Those corporate customers won't actually pay your invoice for 90 days. It's pretty standard B2B practice. Meanwhile, reality hits. Your shop's rent is due tomorrow, your barista's salaries are due next week, the supplier needs to be paid right now for those pastries. Suddenly, you have massive sales, but literally zero cash in your bank account. And without cash on hand right now, survival is impossible.
That harsh reality brings us to this famous maxim from experienced entrepreneurs: revenue is vanity, profit is sanity, cash is reality. Think about that for a second. You can boast about your revenue, you can find comfort in your profit margins, but the actual cash in your bank account today is the true lifeline of the business. It is the only reality that matters when the bills are due. Finally, step 5, reading financial statements, the complete financial story. You really need a formal way to track all these concepts. And no, you absolutely do not need to become a certified accountant to do it. Every successful business relies on 3 important reports. First up, the income statement. This tells you how much money came in, how much went out, and how much profit remains. Second, the balance sheet. This shows what your company owns versus what it owes, so your assets versus your liabilities. And third, the cash flow statement, which tracks the actual cash moving in and out of your shop's register and bank accounts. So the crucial point is that together, these 3 reports form a comprehensive picture. They tell the complete financial story of your company. To truly master this blueprint, you need to use those statements to think like a CEO. Every successful CEO regularly asks themselves 4 simple questions. 1, how much money came in? 2, how much money went out? 3, how much profit did we actually make? And 4, how much cash do we have today? If you, as the coffee shop owner, can answer these 4 questions at any given moment with absolute confidence, you are already light years ahead of most beginners. You are taking control of your destiny. Ultimately, business finance isn't about becoming some math genius. It's about understanding the language of money. Mastering these 5 concepts, revenue, expenses, profit, cash flow, and financial statements, is the absolute foundation. Understand the numbers and you will grow the business. You'll understand how to survive and how to become truly successful. Because at the end of the day, in business, the numbers always tell a story. So I'm going to leave you with this question to ask yourself about your own endeavors. Do your daily numbers tell a story of a business that is just barely surviving, or a story of a business that is truly succeeding? Dive into your statements, find out what story your cash is telling, and keep learning. Thanks for joining me on this explainer, and I'll touch you next time.